So in this video, we're going to talk about Google, and they took it on the chin today as the stock sold off roughly 7% or $14 as they announced a spending hike, but also cloud revenue also missed estimates. However, price is at a level where buyers continue to go long. Now, one thing I want to bring to your attention, see this gap in this basing candle. That gap is really an extended range green candle, and then you have a basing candle and then the rally out, making that level a daily buy level. But I want to zoom out to the weekly chart and kind of prove to you that the buyers continue to defend this support, which was resistance in the past. Now, before we continue with the analysis, let's look at the actual results. So shares of Google parent Alphabet plunged Wednesday after it outlined plans to increase capital expenditures this year by more than Wall Street analysts had expected, while its cloud unit revenue disappointed Wall Street estimates, exacerbating investor fears around profitability. Now, we all know about DeepSeek as it came onto the scene a couple of weeks ago. So DeepSeek claims that its model delivered comparable performance to OpenAI's ChatGPT with less advanced chips at a fraction of the cost. And eventually, is it profitable? Some will say yes, some will say no. Nevertheless, Alphabet plans to spend between $16 billion and $18 billion in the first quarter, far above the $6 million DeepSeek said it spent on building its AI model. So Google's pretty serious about catching up and staying even with these new and improved large language models. Alphabet CEO Sundar Pichai said DeepSeek's team has done a very, very good job, but noted that Google's Gemini AI models are similar in efficiencies. Now, developing its AI capabilities and folding these offerings into its operation like search and cloud computing has been a central focus for Alphabet's capital spending strategy. Still, investors have flagged worries about Alphabet's returns, particularly an easing in sales growth and at the cloud business. Overall, Wall Street analysts lowered their rating on the internet giant, but maintained an overall positive view. They highlighted that the cloud revenue shortfall was due to capacity constraints, which means the company could see a revenue catch-up later this year. Now you have Mizuho analyst James Lee cut his price target to $230 from $235 while maintaining outperforming rating. Lee highlighted that the increased capex investments should be a positive long-term, suggesting management is confident in AI and the cost advantage of custom ASICs. All right, let's kind of get back to the charts. So you do have protection. Again, prices are off near the highs of 205, currently trading at $193. You can put a stop at about that 180 level if you wanted to go long now. Let's see if there's an opportunity to get in with less risk. All right, pretty much if the earnings, you have this 3-day candle rule. You want to see what price action does over the next subsequent couple of trading days after a huge drop. The best setup is going to be the following. Price comes into that level, and then you have the next impulse move higher. So let's note this here on the charts. This is going to be a daily buy level at $185. Thanks for watching. Subscribe, please. Like the video.